I found the perfect business loan for you. And during this training, we're going to decode exactly what it is and how you can get approved. Now listen, if you've ever wondered what are the best business loans to get, what you can qualify for, how to get the highest loan amount, how to get business loans for startups, that's exactly what we're going to be diving into during today's training. By the end of this training, you're going to know the best business loan for you, what it takes to get approved, how easy it is to get approved, and how to get approved for the highest amount of money at the best term. And if you stick around to the end of this training, I'm actually going to get you access to a tremendous amount of options when it comes to business loans, so you can even stack the loans and be able to qualify for more funding. Look, we got a lot to cover, so let's dive in. So, does a perfect business loan even exist? Well, honestly, that depends on your unique situation. The way that lenders look at financing is different now than it ever used to be. You see, back in the past, if we wanted to qualify for a business loan, we had to go to our bank and qualify for an SBA loan. That was very difficult because we had to meet SBA's requirements and the bank's requirements, which usually required that we have a substantial amount of collateral, really good personal credit, and years of tax returns that show significant profits. Well, let's be honest. A lot of business owners don't have that, especially in the early stages of their business. But the nice thing about today's lending industry is that 90% of financing no longer comes from those big banks. It no longer is SBA-backed financing that has all of these dramatic qualifications to get approved. Nowadays, 90% of financing plus comes from what are called alternative lenders or fintech lenders. And the nice thing about fintech lenders is that it's significantly easier to qualify because you don't need all of those things that you needed in the past to qualify for big bank loans. Now, don't get me wrong. If you can qualify for an SBA loan, that's the best thing to do. If you've been in business 3 years or more, you have excellent personal and business credit, you've got tax returns that show profit and collateral, personal or business, that's equal to or more than the amount you're borrowing, then head to your bank. That's the best loan you're going to get. The term is long and the rates are low. We can even connect you with a great SBA loan broker who can help you get approved. But if you don't meet all that criteria, well, then now it's time to focus on your strengths. So for example, there's 3 things that lenders look at, and we call this the 3 C's cash acquisition formula. The first is credit, the second is collateral, and the third is cash flow. And we're going to decode all of those right now. So if you're looking to get the perfect business loan for your business, then first you got to really be honest about what your strengths are. Now, even if you have no strengths, I'm still going to give you alternatives in this training, but let's dive into those 3 main strengths that lenders look at one by one. The first is good consumer credit. Let's say you have good consumer credit, 680, 700 type FICO score higher, or you have a guarantor that has that. Maybe it's a family member, maybe it's a friend or a potential investor that has good personal credit. Well, whether you or somebody else has good personal credit, you can qualify for a program called Credit Line Hybrid. And with Credit Line Hybrid, it's no doc, so you don't need to supply bank statements or tax returns, so cash flow of your business doesn't matter. This means it's perfect if you're looking for startup funding. As a matter of fact, I've never found a better program that works for startup than Credit Line Hybrid. All you need to qualify is that good personal credit of you or somebody else, and you're able to get approved for as much as $150,000 in funding, no doc, with credit lines, and get rates of 0% for up to 18 months. And the best part is you could take the cash out of the credit lines at 0%. Pretty cool, right? Especially since it works so well for startups. Now keep in mind, with the 3 C's cash acquisition formula, you don't need all 3 C's, you only need 1. So in this case, because that program is based on you having good consumer credit, you don't need to verify your cash flow or have collateral. Credit and credit loan is what could be used to get you approved for up to $150,000 in financing. Now let's say you don't have good personal credit. Well, then we want to look at one of the other alternative 2 C's. So let's dive into cash flow financing. Well, cash flow financing is based just on you having regular and consistent cash flow. And if your business has been around generating cash flow for 6 months or more, well, then there's a great chance you can get approved. Now, some of the easiest sources to get this kind of financing are through PayPal, Square, and Stripe. So if you have customers' payments processing through any of those sources and you've been processing payments for about 6 months, you can qualify for as much as 30% of whatever you're processing annually through those sources. There's really no credit check in almost all cases, and in a lot of cases, They don't even charge you hefty interest rates. They just charge you a flat fee. Now, there's all kinds of cash flow financing lenders out there outside of those three sources. And the other alternative sources in the fintech space will lend you as much as $500,000 just based on you having consistent cash flow. Now, terms can be as much as a year, 3 years, some cases even as long as 5 years, but this is high risk financing, so you're going to pay a higher rate. The great news is you can also get the money really quickly. We've literally helped clients in multiple cases get money in 24 hours just to meet their payroll, and it's very common to be able to get this kind of financing in 72 hours or less. Now, most lenders in the space will lend as much as 12 or even 15% of your annual revenue, so that gives you an idea of how much you can qualify for. Now, another alternative is merchant cash advances, and merchant cash advances, again, is based on consistent cash flow, but it's only looking at credit card transactions, not cash coming into your business bank account. But merchant cash advances are even easier to qualify for than cash flow financing because you only need about 6 months' time in business and about $5,000 a month in revenue in order to get approved. So that's cash flow financing. If cash flow is your strength, just the fact that you have consistent cash flow and you manage your bank account responsibly, you don't have a bunch of non-sufficient funds, you've got more money going in than going out of the bank account, you have a positive bank balance at the end of the month, well, then this kind of cash flow financing could be perfect for your business. And the best part is you don't need collateral, the other C, and you don't need good credit. In a lot of cases, lenders don't even have a credit check in order to get approved. Now, let's dive into the third C. Let's say you don't have cash flow or can't verify it. Let's say you don't have good personal credit or have someone around you that does. Well, then this is when you want to look at the third C of that 3C cash acquisition formula, which is collateral. Now, what can qualify for collateral? Well, a lot can qualify for collateral. So first, let's look at personal assets. Maybe you have stocks or bonds. Well, you can borrow as much as 90% of the value of those stocks and bonds. Maybe you have 401ks or IRAs. Without any tax penalties, you can actually borrow as much as 100% of the value of your 401k or IRA. Maybe you have vehicles or real estate that can be used as collateral as well. The same on the business side. Maybe you have inventory or you have equipment or you actually want to get product and sell it online. Or you have commercial vehicles or you have also commercial real estate. Any of those things can be used as collateral to qualify you for business financing. And with this kind of business financing, oftentimes rates are very low. In many cases, 5% or less, plus it's not based on the other two C's. So you're able to get approved without any kind of credit requirements. As a matter of fact, in a lot of cases, there's not even a credit check, and you don't have to verify cash flow as well. All you need is to have an asset that can serve as collateral to qualify, and chances are great you can get approved. So now you know how to get the perfect loan for your business, focusing on your business strengths. The next thing is, how do you get the highest loan amount? Well, that all comes down to fundability. And if you want to learn more about all the funding you can qualify for right now, as well as get your access to your business credit reports at no cost, tips and tactics to build your business credit, and be able to learn how to improve your fundability, give us a call for a free finance assessment. All those things we'll do for you at absolutely no cost just by giving us a call at 877-600-2487 or scheduling your consultation online at creditsuite.com/consult. Did you get value from this training? If so, make sure you like and subscribe and keep your eye out for our next training where we talk about more cool ways to get the money you need to start and grow your business.